On July 4th, Congress passed the One Big Beautiful Bill. This is a massive tax bill. It spans roughly 870 pages. It's very dense, but today we're going to focus in on one aspect of this new tax bill, which affects charitable giving. First, I'm going to cover the changes that were implemented as part of this bill. And at the end, I'm going to talk about some helpful tips that will help you maximize the tax benefits of your generosity. To understand the effect of the recent changes on the charitable deduction, we have to take a step back to 2017 when the Tax Cuts and Jobs Act was enacted, the TCJA. So the TCJA doubled the standard deduction, which was a welcome relief for a lot of taxpayers. The Tax Policy Center estimates that roughly 90% of Americans take advantage of the standard deduction. And so this is overall a positive, right? Many, many more Americans are getting a larger standard deduction. But the negative, the downside of the TCJA and this doubling of the standard deduction was that most people were not seeing any tax benefit of their charitable giving. Charitable deductions have to be itemized. And so if you are taking advantage of the standard deduction, you're not itemizing those charitable deductions. And generally speaking, you're not going to see any tax benefit from your charitable contributions. And now comes the One Big Beautiful Bill. A lot of tax professionals are referring to this bill as OB3. And what OB3 has done is it reinstated or added an above-the-line deduction for charitable contributions. So what this looks like is that even if you as a taxpayer claim the standard deduction on your personal income tax return, you can still take an above-the-line charitable deduction. Now, there's a limitation, which is $1,000 for an individual or $2,000 for a married couple filing jointly. One caveat, the deduction is limited to cash contributions, so it does not apply if you are gifting highly appreciated property. But I guess the question is, who is the big winner here? Now, obviously, anytime there's an above-the-line deduction and you can claim the standard deduction and take the above-the-line deduction, that's a win for the taxpayer. But I would argue that the charities are going to benefit even more. This really is going to incentivize charitable giving. There was a similar above-the-line deduction that was part of the CARES Act in 2020. So for 2020 and 2021, there was a $300 above-the-line deduction for charitable contributions. And according to the estimates that I've read, somewhere between 50 and 90 million taxpayers claimed that deduction in those tax years. So that's good news. Hopefully this will incentivize charitable giving, but there is some bad news. There were two separate provisions that were enacted that relate to charitable contributions. One of them is a new limit to deductions for those who itemize and who are in the highest marginal tax bracket. So starting in 2026, QB3 caps the tax benefits of itemized charitable deductions at 35%, even for those individuals who fall into the 37% marginal tax bracket. So this will have the effect of limiting the overall impact of your charitable deductions for those in the highest income tax bracket. The second limitation, also for those who itemize their deductions, starting in 2026, those who itemize will only be able to claim a charitable deduction to the extent that their charitable contributions exceed 0.5% of their adjusted gross income. So what does that mean? To give you a concrete example of how this floor works, let's assume that a couple has an adjusted gross income of $400,000, 0.5% is their floor, meaning that they can only deduct charitable donations in excess of $2,000. So here's some tips on how to plan around the recent changes in the tax bill, keeping in mind that these changes take effect in 2026. If you're the kind of person who typically waits until the end of the year to make your charitable contributions, it might make sense for you to wait until January 1st so that you're in the 2026 tax year so that you can take advantage of the new above the line deduction. And second, if you are a person who itemizes their deductions and you may be a high income earner in the highest marginal tax bracket, if you've been considering making a substantial charitable donation, it might make sense to make that donation in 2025. And that's because these new limitations that we talked about only go into effect in 2026. So, for example, you could consider bunching, or you could consider making a contribution to a donor advised fund. The benefit there is that you can make a larger contribution in a single tax year. You can claim the charitable deduction as long as you itemize in that tax year, and then you can spread out your charitable donations to the different charities that you're choosing over a period of years. I want to give a quick shout out to Christine Green, who is a tax attorney from Steptoe and Johnson. We recently interviewed Christine on the Death and Dirt podcast, which, if you don't know, is a podcast that I co-host along with my good friends Jay Hagerman and Jen Galloway. It's a production of the Pennsylvania Bar Association. And in this most recent episode, we interview Chrissy on a lot of different aspects of OB3. She goes into a ton of detail. So whenever that episode drops, I'm not sure which one will come first, I will make sure to put a link to that interview in the description if you're finding this on YouTube. So please check out the podcast, check out that episode, and I'll see you next time.